Hey everyone, how's it going? It is I, the real Randy Chavez, coming at you today with a bumper podcast update video. Guys, if you're new, welcome. If not, welcome back. I love y'all. I want to say hello to Nastascia. Hello, Nastascia.
Hey,
Jordan,
Dashi.
what's up, man?
Hey, what's happening, Randy? Great
Um,
to be here.
yeah, ready to get get this bumper bread. Just kind of waiting on the CEO. Is obviously has insane amounts of what do you call it? Just insane amounts of work that he's been doing the last couple of years. So we're just as we wait on him. Want to discuss what your plans are with Omi over the next couple of weeks?
Omi. Well,
Yeah,
I
are
know,
you?
I hear you might be buying a little bit more and living in your car. No, that was a
Oh,
joke.
that's yeah. So I wasn't gonna say. Oh, I guess I will now. You obviously have. Well, let me read something that I wrote on X before because I feel it has a lot of precedence here. It's got a lot of room. So I said, all right, here's what bears and fudders think. Oh man, bid forex is down. There goes Omi. This is the end. I better sell before it goes to zero. And then the bulls and the whales have the mindset of, okay, this is a short-term setback. It's clouding people's long-term judgment. People are panic selling their OMI at a loss, causing the price to temporarily go down. Let's throw another 100K at it. Let's look at what we know. Something happened that wasn't the fault of Vivi or Akomi. The thesis of those companies haven't changed, and the utilities are still planned. Let's throw 200K at it. And let's not forget that money in the stock and crypto markets don't go from the poor to the rich. It flows from the impatient to the patient. And you obviously have some people that are just absolute doomsday. Oh, here we go. Here's Jonathan. Let's get
Hey
him on stage.
chaps.
Hey, what's going on? How you doing?
Yo.
Yeah, good, thanks. Hey guys, good to see you both. You been
Yeah,
well?
Yeah, it's been about 6 months or so, I think. Been a little while.
Yeah, I
and
think
boy,
so,
what a
man.
six
It was just
months
for
it's been.
September, wasn't it?
Yeah.
Rock and roll, man.
Yeah,
Five, yeah, 5
you
months.
you look good. So
Yeah,
you've
thanks,
had
man.
a
Thanks. Well, it's kind of
yeah. So we've had a. I got a little bit of bumper for this fund that I'm in control of. It wasn't a lot. It's like 5 grand. I think we made it up to 10 grand recently, and we'll do more as we get in. It's just right now it's a little harder to get, well, because there's not a ton of volume. So if you put in more than like a couple grand at a time, it kind of pumps the price. And I know first world problems, but it's something we kind of wanted to talk about. If there's any people that want to put in a large amount of money, whether it's me, Jordan, or anyone that we kind of advise, is there a way outside of pumping the price that we can go do like that? You guys take OTC deals, that you guys go and you have a thing where we could go and not pump the price, or is it just like that's what you got to do for now?
sure. I mean, the best exchange with the most liquidity is Bitmart. So we have a market maker, Flowdesk, who should be kind of keeping that, those kind of slippage costs down as low as possible. But for sure, if anyone wants to kind of hit us up in Discord, we're certainly open to OTC trades for sure.
Okay, that's great. That's fantastic.
Awesome. Yeah, I picked up more bump last week as well. So
Sweet.
collecting it.
Cool, man.
All right, Jordan,
Yeah,
we'll go
cool.
back and forth with
Accumulation.
the question. You go next.
Sure. I mean, this is just a question that it's going to be on everyone's minds. You know, this question is one of those when questions. When exchanges, and
Yeah, right. Yeah.
as I know,
Well,
people are asking me.
yeah. So I think it's really a matter of just trying to get our ducks in a row before we kind of really start to kind of push the boat out to what we call kind of tier 2 dexes. So at the moment we have a listing on Bitmarts, we have version 2, version 3, kind of Uniswap. We've got a Uniswap on Arbitrum running. So we are in communication with a number of what we call tier 2 exchanges that we want to list, and we want to do that as we start to see the trading volume go up. Once we see the TVL of the protocol go up to kind of sink into that. So we're kind of earmarking beginning of Q2 for another major listing of an exchange.
Awesome. That's going to satisfy all the when people.
Oh,
Exactly.
so I know you're looking at the trading volume. Do you expect that to go up as a result of the protocol you guys just launched, or is it like, hey, now that we're making a little bit of revenue, we can go and market the token? or is it? How do you expect the trading volume to go up in the short term?
Yeah, I mean, it's a kind of multi-pronged kind of approach to that. So I think that the most concise way to kind of communicate this is that when we launched the protocol back in September, it was such a complex piece of machinery to publish, and certainly, there was one coder there who's kind of worked on MakerDAO and Barnbridge and Gnosis, like one of the world's best coders, and he said this was the most complex protocol he's ever worked on, and he's still signed off ill after Bumper. I mean, it was just such a monumental effort to get the protocol launched and get it running. And then what we found is that there were small kind of glitches in the protocol, nothing major, but things that were kind of preventing people from kind of using it and having a really frictionless experience. So with the latest update that we did last week, we are now out of all the bug fixes. So the protocol is now absolutely kind of really purring really well. And we'll probably maybe have a little bit of moment later just to go into some of that kind of performance data of how Bumper now stacks up to competitors.
Oh, that's awesome.
But in terms of
Sorry.
But in terms of the token, though, there's a multi-approach to approach. So one is that we'll be introducing a bond into the protocol. So it means that when you want to use Bumper, you have to kind of put up a deposit of Bump tokens into the protocol that's then returned back to you afterwards. So that gives a really kind of key use case for the token that should drive up demand. It means everyone using it is aligned with Bumper in having to use that token, right? We're also publishing a document that should be coming out this week on our token economy. So this is where we've been working really hard to reduce the emission rate of the Bump tokens, to demonstrate to the marketplace that the circulating supply that is out there is not really going to increase in any kind of significant way in the near future. So people have that kind of security that the Bump token is not going to kind of just get diluted with new kind of supply coming into the protocol. And then, yes, obviously now we have a protocol which we 100% is working, as per our expectations. We're going to start to open the faucet of marketing budget and direct all the funds that come in for protocol usage into acquiring users. Because one thing we can tell you is that the protocol performs really well. The world doesn't really know about it yet. So we need to kind of start to kind of get that awareness game on, basically.
Awesome.
George,
Yeah,
next one.
I was gonna say, so yeah, no, go for it, Randy.
Oh, okay. So before you had put out the account had put out a meme saying like beat the bears like Linda did, and it looks like Linda's on like at the end of like a hunting trip or whatever, saying discovering the unique benefits of trading with the unlimited upside exposure and protected value floors to the downside. Is there a limit to that? Is it like, could you do that not just with your own money? Could you do that on margin? Like, is there a certain type of threshold that you guys like, oh, actually, we can't do that much in volume, or is it fairly unlimited?
In theory, it's unlimited. The main kind of throttling is we need to kind of maintain a balance of sorts between makers and takers. So if you remember the protocol, people might put in ETH or Bitcoin to protect that. And on the other side of that is people who are depositing USDT stablecoin and earning a yield. And the yields are really good. I mean, at the moment on the ETH market, we're paying out nearly 20% APY. So it's a solid yield for that. So what we're kind of hoping is that as more takers come in to protect their assets, there are going to be people out there sitting on USDT that are just going to go in and scoop up those rewards, basically. So there is a limit in just how many makers we've attracted to the protocol. But at the moment, we have more makers than takers, I think.
Yeah. Sorry, Jordan, to kind of cut you off, but just a follow up on that. You couldn't, like, if you have bumped ETH or bumped whatever you have, you couldn't stake that, could you? Like, you can't stake bumped ETH anywhere?
Okay. That's the key question. So now that we're out of what we kind of call that kind of triage of kind of bug fixing, we are going to look at a way to rehypothecate the token that you've put in there. So we want is for people who've bumped their ETH. So what we're trying to fix here is the fungibility problem. basically, so that people can take their ETH, send it to the protocol, they get bumpered ETH back, which is now what you've now done. Basically, you've removed the downside volatility of ETH, right? And you're paying for that service. We want people to then be able to use that in perpetual futures. We want people to use that in open up a collateralized debt position and know that they can't be liquidated because their bumpered ETH will only hit a certain price floor, and obviously the protocol sits behind it. So we are planning in the next week to roll out what we call the killer app that's going to sit on top of Bumper, and that fungibility one is the one that's number one on the podium for us to kind of get out ASAP.
Oh, that's awesome.
Yeah, we've just got a question. I think because Jonathan, we didn't have you on the stream at the start, we didn't really introduce you, so some people might not know who you are. So Jonathan is it CEO of Bumper?
Chief exec. That's right. Yeah.
Yep. And so if you can just like give us a quick rundown of what Bumper is for people that are new that are watching. Just had a couple of questions of that might not have seen you. Sure.
Yeah. Okay. All right. So I'm the chief exec of Bumper. I'm joined by a CTO who's the guy who designed the underpinnings of how synthetics work. So which was kind of built on something called Haven, which was an algorithmic stablecoin. And together with my business partner Gareth and Jason, who you know was our CMO, we came to the conclusion about 3 years ago that there must be a better way to protect users from the volatility in crypto. Now, the traditional instrument that is used in TradFi is called an option. Okay, options are massive. They were invented, weirdly, actually, almost 50 years ago from the day we released Bumper, and they won the Nobel Prize for economics. I mean, it's just given rise to a whole industry in itself, right? And it's called the Black-Scholes options formula. The problem is that formula just doesn't translate very well to an on-chain decentralized protocol. And additionally to that, there are features and characteristics within DeFi that we knew we could use that TradFi can't really kind of access. So there I'm talking about the automated nature, the fact that you have almost kind of very low latency, very high frequency, very high liquidity of money that can just flow between different protocols and be rehypothecated. So in a nutshell, we designed a protocol 3 years ago that was going to beat Black-Scholes and was going to provide a much easier way for people in crypto to sleep at night and not worry that their asset, is going to drop 30%. What Bumper is then is a protocol that in 5 clicks can protect your asset. You just decide how long you want to protect. So the minimum term we have is a week. You protect what floor you want to protect. So 99% is the highest floor. So 99% of the price of Bitcoin today, you can lock that in for a week, and you will pay a fee that is definitely 30% cheaper than Deribit, which is the main place people buy options. We've pushed it much further than that. We had a whale that came in with a very large position. He played it was a really great trade. It was a legendary trade using Bumper, and it was 96% cheaper than using Deribit. So Bumper is ridiculously efficient at protecting your asset, and it's really, really versatile. And I think that's the last point I'll just kind of end on, is that if you're fairly sophisticated and you know options, they're pretty gnarly. You might just say, oh, well, I want to protect it today for a week. And you go to Deribit and there is no one selling that option. They might be selling where you can protect in 3 days and you can have a 4-day term. It's not quite what you want. With Bumper, you can choose exactly the time you want to be protected. And the beauty of it is you can cancel at any time. So if you find the market's pumped up, you don't need that protection, you can just cancel your policy and just kind of jump out of it. So Bumper is the most versatile and the most cost-efficient way to protect your digital assets.
Awesome.
We get a question from the audience here. Dr. Stuff saying, I like the idea of having an account that is using Bumper to show how Bump works. Can you talk about how that account has been doing?
Yeah. I don't have the details, but the marketing team have come up with the bumper intern, which is a kind of avatar that we've created in-house that has positions open every week. If you go to our Discord group, then all the trades are visible there, so you can have a look at that and see the profit that intern is basically making by using bumper.
That's great. Jordan?
Oh, that's awesome. No, I was just gonna say that's awesome. Yeah. No, I don't have any other questions at the moment. Randy?
Okay. Yeah. So, I know you guys said you were looking on exchanges. Don't do Bit4X. I assume you've heard what's going on. Yeah. So stay clear of that one for now, or probably forever. I guess another one. Do you guys ever plan to be? Do you guys ever happen to go and take a look at being cross-chain?
Yeah, so that expansion is definitely part of our kind of plan. Like I said before, we've just been head down, first of all, in research and development, and then launching it, and then realizing there's kind of bug fixes around the edges that we needed to kind of perfect. So now that's done, and part of that process of bug fixing was realizing that actually the protocol was so complex that the gas costs were just insanely high on Ethereum. So, to give you an example, I mean, a typical user might be paying like $3 a day to protect one ETH, but was having to pay $150 just to open up the position because of the ETH gas costs. So we migrated to Arbitrum, which is about 100th of those costs. So that $150 goes down to, $1.50. And we are now we're kind of out of that kind of triage. We're going to be looking at other chains. If your community or you guys have any kind of recommendations, we would love to kind of get some feedback on where we go next.
So is it multi-chain right now? Is that how?
Yeah, well, we actually closed down Ethereum because it was just, just commercially, it just didn't make sense. Kind of people using it on there.
I still have bump on Ethereum. How does that work?
You trade bumper.
Yep.
On Ethereum.
Yeah.
So you can trade the token, but the actual protocol itself. So
okay. So not the token, but the protocol itself. Okay, that makes sense.
Yeah, and then you can bridge the token over to Arbitrum as well if you want.
Okay, so you can. Yep, gotcha.
I'm not sure if you guys have models around this or if you're just kind of keeping track, but the bumper intern account that's been, doing very well. Do you guys have models out like, we predict this is what it'll do in 6 months, 12 months? How long does that go out, and what is the margin of error the longer it goes?
Yeah, sure. I mean, there definitely is going to be error in kind of forecasting forward because we don't know what the volatility is going to be, and therefore we don't know what the premium costs are going to be. However, one of the key design decisions we made on day 0 was we are going to build a perfect simulation agent-based model of how the protocol works in Python, and we're going to dedicate a whole team to that, as well as then building the actual protocol itself in Solidity on Ethereum right now, Arbitrum. So that model that we built was probably the most expensive, and when we're talking about a multi-million-dollar project there, right? And it was the most, and at times probably more complex than the actual Solidity code, because you had to solve the problems first in simulation, and actually that then told you how you can solve those problems in Solidity. But that protocol. So if you imagine there's 2 bits of tech now that we have. One is an in-house simulation, and then the other one is an on-chain protocol that's actually running. What we're in the process of doing now, and I think the guys were kind of working over the weekend, is you get live data coming out of the protocol and you plug that in to the simulation, and we are getting an almost 100% correlation between the two, which shows that our simulation is a really good copy of what the protocol is actually doing. But what that enables us to do, Randy, to kind of speak to your question there, is it then enables us to kind of say, okay, well, if the volatility of ETH does this over the next kind of 6 months, what are our premiums going to look like, basically? And so we'll kind of make that information open to the public. And if people want to come and say, well, if we see a 10% increase in Ethereum over the next kind of 6 months, what kind of premiums am I going to be looking at over the next 6 months?
As the as that goes, how much of the And if you could talk about this, we can. It's fine. Out of the fees that go into it, how much of the fees do you guys get into revenue, and what are the margins on that after paying everything?
Yeah, sure. Well, at the moment, we're not charging any protocol fee. So the only fee users have is the what we call the premium cost for the option.
Yeah.
Okay, we see that as a kind of, we want to get this mass market before we start turning on those protocol fees, and we have sufficient runway to kind of keep us going during that period. And obviously, what we'd hope to see is that the token price then starts to increase, and we can start to kind of build up that kind of treasury capex. Does that kind of answer your question, or have I missed the point?
I mean, when you guys do put on those fees, how much are they, and how much of those fees go to revenue versus how much are going to pay for the product and the people and the keeping the lights on and all that?
I mean, at the moment we're looking at, I was just getting some stats when I came on the show. We're looking at about 0.1% per day as your premium. Okay, so it's,
and you guys did,
like I said,
you guys did like $500,000 in January, right?
Yeah, that's right. Yeah, and we've done about $1 million worth of traded volume on the protocol since it launched.
Okay, so about 550 per month.
Something like that. Yeah.
Yeah. Okay. Cool. And it looks like it's growing. That's great.
Yeah. So the main fee is obviously just the premium fee, and as we said before, that's much better than you would get in the main marketplace, which is Deribit. And the thing is, I want to just make really clear, and this is something we didn't realize when we kind of went in the outset. Deribit's a centralized exchange, right? It's like Binance, but it sells options, right? What we found is that there are decentralized option protocols. They are much more expensive than Deribit. So we are the first one that is decentralized, and we're beating the market leader by at least 30%. So I think it's just what we're trying to kind of garner is, people in crypto aren't very used to kind of taking protection over their assets. People are, kind of YOLO in. There's a bit of a kind of DJ kind of mentality there. And that's something that we think we can repurpose Bumper to tap into. But if you do think that there's going to be a price drop, and you are a sophisticated trader thinking, okay, Bitcoin, I think it's going to drop by 10% this week, Bumper that Bitcoin, take that profit.
Before I get into what other bumpered coins that you guys might have, just a little background. I think Mr. Beast has the #1 chocolate bar in America, not because the chocolate bar is good. It's not, but it's just because he has like 1 billion followers. And I think last year you had Dave Portnoy sell Barstool Sports over to Penn Entertainment because they're an entertainment company. They're just a content creation company, and that's what they needed. You guys are obviously going to market at some point. Are you going to go and buy any type of company, or are you just going to go and say like, hey, we need a couple of influencers that are good in the space, and we'll do that? And what type of influencers would you be looking for if you were to go that route?
It's a good question. I probably need to defer to our marketing team who've kind of workshopped that particular issue. I don't think we're going to be on an acquisition spree.
Okay.
I think the main kind of growth plan for us is integration. So, like I said before, if we can kind of plug Bumper in to that existing ecosystem that's out there within decentralized finance, and Bumper, does bring a unique property to that. It like I said, it enables users to remove the downside volatility of their asset, and if they can then stake that into another protocol or leverage up on that asset to make more profits, then that is the way that we're going to grow the protocol and get those users.
So I've got a question here. So Jonathan, when you've got you said you haven't added a fee in yet for basically for Bumper. So when you do take a fee, is it going to be like a percentage, or is it going to be like a set fee? So you want more and more trades, or is it going to be more of a percentage based?
It'd be percentage based. We were kind of circling 0.05%, so it's very, very low trading fee, basically.
Awesome.
On the asset.
Yeah, it sounds unreal. Like I've really liked your technology over time. I'm still trying to wrap my head around it, and I've seen some of the comments. People like brain blown. They don't quite fully understand it because it is fairly technical. Yeah, it's really interesting.
Take take a shot at the white paper. That's probably the best place to really get your head around the
Yes.
technicalities of it.
You're making Buddy's brain hurt down there.
I think like the intern trading that you can follow along would make a lot more sense for people. I think it's going to be a really good way of explaining it when you can physically see it and see what it does and how it works.
Absolutely, and I think we're about to release a report on different trading strategies that you can use with Bumper as well. So to give examples of how the protocol could be deployed to make more profit. I mean, that's really what we're talking about here. It's not just protecting an asset so you sleep at night. It's protecting an asset so that when the price drops, you can sell your bumpered asset for the price it was at the height, and then rebuy your Bitcoin or Ethereum at a lower price and accumulate more. Right?
Yeah,
You should really
don't get
market
rug.
the swing traders.
Yeah, so
Swing
don't
traders
get rug
would eat
pulled.
this up. Yeah, the swing traders would go and just put it like a competition. Like, all right, we'll give out of a pool of $5,000. You know, whoever has the most success with Bumper in like a quarter or a 1 month period or whatever, you know, we'll get the majority of that, and then the second will get, you know, less, or it'll get less. That'd be really fun to watch.
100%. So the two main things we're going to do that we're kicking off in March, because we're just coming to the end of February now, aren't we? Is first of all a referral program, so for people to be incentivized to basically tell their friends and colleagues about this, and then the second thing is a trading competition. So to incentivize people with a kind of cash bonus on who can kind of be the biggest demon on Bumper and generate the most profit.
Do you have a what is the list now of tokens that you bump, and what's next on the list?
Another good question. Yeah, so we started off with the big two, so the Ethereum and Bitcoin. So because they're on Arbitrum, they're obviously wrapped versions of those assets, and we thought rather than just do Ethereum, you know, staked Ethereum, so kind of Lido staked Ethereum basically is what you can kind of put into the protocol. So which in itself is pretty cool, right? Because you've got Ethereum, which is earning a yield because it's staking, and then you're protecting that Ethereum with Bumper, and so over net you're paying very low premiums once the yields are being taken into consideration, right? So it's kind of, you're almost kind of delta neutral. The next one we'd like to go for a bit more of a kind of degen community based token next, so maybe a kind of Bonk or a Doge or a Shibu, something that, you know, people are familiar with, that is super volatile, and to kind of have a bit of a play with something a bit alternative. But again, if anyone has any suggestions, just let us know. It's pretty easy for us to add in tokens into the protocol now.
Does it matter what chain they're on? Does it matter if they're like if it's on Solana or if it's on Ethereum? Or
yeah, as long as that token can be kind of wrapped and imported across into Arbitrum, which I think nearly everything can be now, the major tokens.
Yeah, there's like 4 different types of OMI, so we're good. What do you need for us to get OMI on that list?
Yeah, right. Well, I think we should probably just shout it out in Discord, and if we get enough people, then we'll make it happen.
All right, guys, we're gonna have to raid later.
I was going to say, I think we'll get the numbers for OMI. Don't worry about that.
Yeah, cool.
What about cross-chain to base? I don't know if that was answered before when we were talking about that.
We'd love to get onto base. I think that's. I mean, it's super straightforward. I mean, I think we forecast 3 months to take us from Ethereum to Arbitrum. We did it in a month. So we've got our heads around now going cross-chain, and it was easier than we thought, basically. So base will be super easy because it's EVM compatible. All the code's already there in Ethereum. So the only issue for us is each time we go to a different chain, we then have to set up the taker and maker pools. So we kind of split our liquidity across different chains. So that's a consideration for us. We need to kind of keep a little bit of concentration. And then we have what we call keeper bots, which is a bot which is looking at all the different ratios that it needs to kind of keep the protocol in balance. And there is a small gas cost attached to that as well. So we just need to scale sensibly and considerably.
Marcus Jones has a really good question here. It says, right now, Bumper seems to be more focused at retail traders. Is there going to be an iteration that's focused for institutions?
Really great question. Yeah. So Bumper for now is definitely been kind of targeted at retail. There's a reason for that. Okay. So we're the first people in 50 years to say we have discovered and perfected a better way to protect yourself than using Black-Scholes options. Okay. Now, retail are a really good candidate to be an early adopter of that, right? And so we're kind of building up our performance data now to show that, you know, A, that the protocol is definitely cheaper than options, and B, that the protocol will remain solvent under all price volatility conditions, right? And we're getting very close now. Like we say, we've got 6 months of data. We can now go out to institutions and start to kind of say, look, we can give you comfort in that. So institutions is our next big target. We are in communication with OKX. We spoke to them last week. They have an institutional kind of list of services that they put in front of those customers, and they tend to be hedge funds, family offices, and kind of banking partners and so forth. They are super interested in Bumper because they can see that data is starting to kind of come through. So we're going to be focusing more on those bigger guys, and when they come in, the liquidity problem should start to disappear.
Awesome. That's really exciting because like six months is a lot of data. Like we've had a lot of swings in the market in 6 months. Would you ultimately need a couple of years, or is 6 months enough for them to start to get interested?
I think for the institutions we've talked to, they've kind of said, look, come back when you've got 6 months of data. If we like those numbers, we'll then scale in. So we'll kind of scale in, and we'll kind of just keep increasing as we get more kind of comfort. But, you know, the interesting thing with institutions is that take the US, right? There's a huge amount of kind of institutional crypto funds held within US kind of entities, those kind of family offices and crypto hedge funds and so forth. They can't use Deribit. They are forbidden for using Deribit. So from the hedge funds we spoke to, their words, as they said to us, is we are sitting ducks because we can't legally take a position on Deribit because it's not regulated and offered to US institutions. Bumper, because it works very, very differently, we don't see that being a problem, and we're decentralized. So we are gunning for those American customers for sure.
Awesome. Awesome. Go for it.
Oh, I was saying, if you have a skeptical swing trader that is just saying, hey, why can't I just go and do the stop losses? How's it any different? How do you incentivize them to go and use Bump?
Yeah, I mean, we had this question kind of throughout the whole history of Bumper. We got quite a few memes of like, you know, don't call Bumper just a stop loss. The main issue with the stop loss is that, and a lot of the institutions we talked to really understood this, is that you can just get wicked out of your position. So you might have your stop loss in overnight, it hits that, it cashes you out. The market then in the next kind of couple of seconds or minutes then pumps up again, and you're out of that. Yeah. So what Bumper does is overcomes that problem, and it gives you the duality of, okay, I've got cover if the price collapses, but I'm going to be included if the price goes up. So you get, it's a win-win, and I think that's why Bumper is very, very different to a stop loss.
Yeah. Good question by Dr. Stuff. What were you saying, Jordan? Before I interrupted.
We've just got a question here by Pro Legendary. He asked, is there going to be any mass marketing in this bull run in the next couple of years?
Yes. I mean, our kind of thesis, which I'm happy to share, is that we think the market is going to be in an upward trend and really start to go hyperbolic in Q4 this year, maybe into Q1 next year, potentially. So we'll kind of see. So we're kind of keeping our powder dry right now. What we're looking to do is to kind of get those early adopters in, reward them really well with bump tokens for using the protocol. Hopefully that token price will start to kind of see a speculative accumulation. We as Bumper team are going to do everything we can to support that with exchange listings and liquidity, and being very transparent on the token economics and putting those incentives in so that us and the users are all kind of got shared kind of alignment of like, let's see this kind of token price go up. And then when we feel the timing is right, to take the protocol mass market, we've got that budget that we'll deploy for sure.
Awesome. Randy?
Any airdrops? I don't know.
No, it's not an NFT project.
Yeah, like, I don't. Yeah, I don't see why that would happen. But in case I'm missed, like, oh yeah, if you hold X amount of Bumper, we'll gift. I mean, we'll gift you more somehow. I guess almost like staking.
Yeah, exactly. I mean, I think our kind of view is that unless community are actively doing something to support the protocol, we're not just going to throw away tokens on it. Basically, so if you're using it, if you're part of the trading program, if you're kind of referring people, then we will be aligned with you. But we're not just going to do blind airdrops. I think those days of they're kind of a meme game now.
Yeah, we're getting really crazy with that.
We've got another question from Stan. Are there any notable partnerships on the horizons?
Yeah, good question. Well, apart from the institutional ones that I've kind of talked through.
You already mentioned OKX, so they're pretty big player as well.
Yeah. I think they're the second biggest exchange now. Looking at their.
Oh wow.
It depends. You look at volume. Yeah, there's a few different metrics.
Depending on what metric you use. Yeah, but I think anyway. So apart from that. The big one, yeah. I think the main thing we'll be looking firstly at kind of cross-chain partners, right? So we kind of covered some of those, and then it's really partnering up with protocols within DeFi, which Bumper can then be kind of pushed into, right? And I've said this from the beginning. You know, Bumper's cool. It's a really cool way to protect your assets. When it becomes really compelling, is okay. What can I now do with a bumpered asset where I've removed the volatility and can I leverage myself with that and not have any risk of liquidation? That is where we want to go next.
Oh, that's perfect.
Awesome.
When you trades in and out of it, is that a taxable event? Or is that something that goes and you have to report on? I guess that's going to depend on where you are in the world. Right?
It's a really great question. We've asked our tax attorney on that. There's a lot of grey matter around this. It depends on the jurisdiction. I think the way to see this is that there'll be a value of the assets that you have when you put it into Bumper, and then there'll be a value of the asset when you take it out. And if there's a taxable event around that, then obviously that's up to individuals to report on that. But in terms of the actual protocol rebalancing itself, we don't feel that is a taxable event within the protocol. No.
Nice. So far, these work on layer ones, or are they going to work on like layer twos?
For sure. Yeah,
Okay.
For sure. I mean, I think anything where there's more efficiency that can be brought to the protocol, and where there's other communities that we haven't had eyeballs on us yet, then we're keen to kind of team up with those guys.
So I have my ear pretty close to the ground with most things in here. I haven't heard of any competition. Is there anyone that's any serious competition to you guys right now, or are they all like miles behind?
There are rumblings. Nothing that we've seen. There was a protocol that popped up the other day, but it's who were kind of projecting themselves as like kind of an options competitor. But basically, what they're doing behind the scenes is they're actually just actively managing those funds to try to kind of put a hedging strategy in, right? Which is super risky. It's only ever as good as the chief investment officer, and people can kind of get caught with the trousers down on that a lot. We think there will be other ways. I think there's just something happened a couple of years ago where I think a few brains clicked into place. Like, we think there's a better way to do this. We're definitely the first out the gate, and we have a running protocol and we have data. We don't know of anyone who's actually got a protocol that's operating like us, for sure.
Yeah, and that data is massive. Obviously, the more every day, with every passing day, you have more data with it.
Yeah, and the other thing, Randy, is that it's a race for us now, because the way Bumper works is that the greater the TVL and the higher the token price, then by design the protocol becomes more efficient and more robust. So we want to get that walled garden around us, basically, and just own that.
Very incentivized to get the price up. Like, it's very incentivized. Okay, that makes a lot of sense.
Yeah.
Cool. I gotta buy more Bump now.
In the spirit of doing that, would you guys do any type of buyback, or is there any type of, hey, this part of our revenue?
Potentially on the cards. Yeah. I mean, there was a bit of a red flag put on that by a regulatory lawyer about if then that might be construed against kind of a regulatory approach. But it's once we've kind of got that profit generating machine in, it'd be a really strong play, right? To do a buyback and burn.
If there's and I'm not sure if you do this or not, and I don't know if this is public or anything. One question, it'll be two questions. One is as a CEO, do you take a salary? And two, if you don't take a salary, would getting around these regulatory laws be like, okay, well, I'm going to now take a salary, and that salary is just going to go to buying bump, and it's just going to be in this account that I'm just really never going to touch.
Yeah, I mean, to answer the first question, yeah, I'll take a salary. Everyone at Bumper is, a fully paid team of contractors who are some of the best in the world. Otherwise, we wouldn't be able to get them. And certainly for the key management team, we will have a token allocation of the Bump token. None of us have sold any Bump tokens. We see it far too early in our trajectory to start to kind of liquidate some of those holdings. But I don't. Yeah, I'm not sure if I really understood your point about how a salary might kind of.
I think it was a way around.
Regulatory scrutiny.
It was a way around the regulatory
around,
laws saying that you can't do buybacks. Oh, well, the company's not doing buybacks. I'm just taking a salary now, and I'm using that to buy the token for myself.
Yeah, got it.
But I mean, the market cap is relatively low. It's in a good position that Crypto Rain really likes. It's in the low millions, has a potential to do a massive return. You said like as it gets higher, it gets more efficient. What's a sweet spot for that? What is the point and where, hey, we were like 92% sure of these things and this amount of accuracy. What's the point where you get to like 96, 99?
Yeah, sure. Around, and again, this comes back to the simulation, right? They can give us an indication of this. So around about 25 cents, the protocol was then extremely robust against kind of black swan events and and any kind of pressure in the market. It's probably worth noting that some of our original VCs paid, they came in at different prices, but they paid anywhere up to $1 for the token price. And they've all kind of said, we will just keep hodling that until we kind of get a profit on top of that. So, we're all incentivized and we're holding to really push that token up into those digits.
So that could happen very quickly. That'd only be about a $25 or $26 million market cap. That could happen, not overnight, but that could happen literally in 1 quarter.
Yeah, 7x, all right, 6x or 7x around there.
Yeah, about a 6x, give or take, 6.2. Yeah, you would have a lot of really good data with that. At what point do you go and raise capital? I know you've had that type of thing before, but when's the next what's the next reason that you would need to have that, whether it's absorbing a company?
Yeah. I mean, we're being approached by some really first class VCs because we start to have that data out there, right? So they can see it on chain, so it's clear to everyone the efficiency of this model. There are some things we would like to build around Bumper. So we kind of talk about it as the kind of the Bumper ecosystem. So, things like the lending, things like the perpetual futures that use those kind of bumpered assets. Perhaps there's a solution there for impermanent loss that we'd like to team up with DEXs on. So I think now we're kind of coming out of this kind of triage and we're just into a growth phase of the business. We're actively having conversations now with VCs to see if there's the appetite to kind of fund some of these extra products that we can build on top.
When you guys have when you hold things on your balance sheet, I know obviously you have Bumper on there, and you probably have a little bit of ETH, you probably have a little bit of other things, but do you guys hold it as Ethereum or do you hold it as bumped Ethereum on your accounts?
You talk about our treasury of
yeah, like whatever's on what the company holds. Do you guys hold it as like normal Ethereum or do you have it as bumped Ethereum and like bumped Bitcoin?
Yeah, sure. Yeah. I mean, the vast majority we hold as cash at the bank or in or stablecoin. For treasury in unstable assets, we have a proportion. I don't have the numbers off the top of my head, but I think maybe kind of 30-40%, something like that. We Bumper it for ourselves. Yeah, for sure.
Oh, that's great. You don't just have normal stuff. You bump it. That's awesome.
Yeah.
Such a baller move.
Got to bump it all.
Awesome. Quite.
Is there any new updates or features that we haven't really talked about before? Or
well, I think since we last spoke, we raised the floor. We raised the floor up to 99% because users kind of said, look, they want to get that comfort. we reduce the floor, the term time down to a week, and then we put in a cancellation button. So at any time, if you kind of feel like you want to kind of just walk away from protecting, you can do that immediately. What we're, like I said, there's a killer app we want to put in the first week of March, and there's a few candidates on there that we want to see. Fungibility would be probably the holy grail. There's potentially a feature where if the price drops, then you're bumpered as you normally would do. But if the price goes up above your floor, wouldn't it be great if you could use the bumper protocol to leverage into that token? So you could kind of 2x or 3x your exposure to Bitcoin when it's in a pump, and then kind of sell out at the peak of that. And there's a crazy idea that that we're going to model, which is that if you imagine the price of the asset is going up, each time it goes up, the bumper protocol would cancel your previous policy and then re-bumper you at a 99% floor of the new price.
Ooh,
so what the
cool.
catch line that would be is, let's say you bump it over a week, is that in that week ahead, bumper would guarantee you to lock in the all-time high of, say, Bitcoin in that week ahead.
How does it do that? Like, what's the?
Well, I mean, this is something we're going to model to see if it's actually feasible.
Okay.
But it would basically, let's say Bitcoin's at 50,000, it goes up to say 51. What the protocol does is it cancels your protection at 50,000. It now re-protects you at 51,000. Bitcoin goes up to 52. It cancels that policy. It re-protects you at 52. And so it just kind of has a trailing kind of floor that follows the price up.
Do you guys use quants for that, or is it like you put it into ChatGPT, or is it just you just grind it out and just code until it works?
Well, we do it in sim. So this agent-based model that we built, we can trial it in there. And the key thing, I mean, we know the protocol can do that. We want to understand, does that put a pressure on the protocol solvency? That's obviously one of the concerns that we have. And secondly, would the premiums for that be kind of, commercially just too high, that it would just, it's not a very kind of cheap tool to use. But one of those three is something we're going to put out at the beginning of March. The fungibility, a leverage position, or lock in the all-time high. One of those three is one we're going to go over the line.
You said there's a killer app. So is that going to be like on the App Store, or is it going to be more like a web app?
When I say killer app, I'm just using colloquial terms. So it would just be a product feature on the bumper protocol. So there'll be a new button with this extra thing you can now do. Because, when you think about bumper, you can either use it just to protect your position, right? And have that comfort. Or you can come in as a maker and earn really good yields, like I said, up to kind of 20% on stablecoin, right? Or you can use it like a swing trader to generate profit, right? So they're the three use cases. And we think that retail probably want to use bumper more for that kind of trading opportunity where they can kind of generate more profit for themselves. So we're going to focus an app on that.
Awesome. And so Doctor of Stuff had a question. Each time you get like the new all-time high price and you have to rebump, would that cost you that fee each time? Or would it be included from the original?
So this, I mean, I'm keen. I need to kind of get across it. Speculating, yeah. This is a candidate that we're going to start to launch into now. We're through this triage. So the protocol would do that for you automatically, right? It would re-bumper you automatically, and you would maybe set the threshold. So if the price goes up by 5%, re-bumper me on that price floor. In terms of the costs for that, there'll be a protocol update cost, which the protocol would need to manage. I think the main sticking point might be the premiums might just be really high, because as the price goes up, in theory, you would be bumpering your asset at 99% of the floor value, right, of that asset, and that might just be too expensive in terms of protection costs. But I think the point that I really want your listeners to land on is that we built this really complex, versatile machine. It works. It's like, what cool shit can we do with this now that we can build on top of it that no one has ever thought of? And that's the cool thing about playing in crypto.
We love crypto.
When you guys do the brain sessions and you have those brain blasts, do you guys go and you have a couple daddy sodas, get a little tipsy? Do you go have other types of things that might enhance your mind, or is it just like you sit there and think for
I'm not sure. I mean, maybe some of the team are microdosing, but I think those sessions they're really intense because you have to go down the rabbit hole and really give consideration to like a very complex machine and what the ramifications will be. And a lot of that work is put onto Sam, our CTO, who is one of the smartest people I've met in my life, and has spent 3 years just doing this. And so he is now he's getting pretty adept. So you can throw ideas at him and he can either swat it away or kind of go, yeah, that's a good candidate. And then, again, one of the best decisions we made is that we're not blind. We can kind of say, okay, that's a really good idea. Let's try it in sim. And it'll take us half a day to set it up in simulation. And we can run through years of data and kind of go, well, how will the protocol perform? And so we've got this kind of really important tool at our disposal now that they're really starting to come into its own a lot more.
So just talking about the simulator, and as you know, AI is a very hot narrative right now. Do you guys plan to implement any AI in any part of the business? Is that something you've looked into?
It's a great question. So listen, there's a two-part to that. The first one is the simulation that we have created is, and I'm very familiar with LLMs. I studied artificial intelligence as my degree back in the day. I follow it incredibly, almost kind of religiously.
Same.
What we do, yeah, right. So what I mean, it's just it's another subject, right? But the simulation that we're doing is just a stone's throw away from an LLM, right? So we're throwing data on it. It does get trained. We tune the parameters. It's very, very similar. And what we have acknowledged is that we have built up in-house a team of expertise there that will very naturally allow us to pivot into some kind of AI LLMs. So again, one of the candidates that we have on the list is to create a AI trading bot that uses Bumper as part of its strategies, right? And awesome. That, to be honest, that would be one of the easiest upgrades to the protocol compared to the other ones. So yeah, the answer is yes, Jordan.
Yeah, because the way you talked about the simulator, it did sound a lot like you've built up like an LML. Yeah.
LLM. Yeah. That's I mean, a lot of the LLMs are built in, a kind of have a Python kind of element to them, and which is the kind of programming code that we use for the agent-based model. So it's very, very similar. Yeah.
Yeah. So yeah, large language model. My bad. LLM. So,
exactly.
Too many acronyms.
Yeah. As this gets bigger, obviously, so will you and your notoriety, and then you have a little more clout. You'll be able to talk to people that maybe you hadn't talked to before, and open a lot of doors. For you personally, what's next for Jonathan DeCarteret?
I think the journey with Bumper now, it's almost just begun, right? It's been 3 years of research and development, which was so tough. So now we have a protocol. It's like, okay, how far can we kind of push this thing out? So where I want to see Bumper is I want to see it just as a button on the likes of Revolut or your Binance wallet or Robinhood, where you got your asset and you just think, oh, it's looking a bit choppy. I'll just Bumper that for a couple of days. Right.
Wow, that's such a cool idea. So there'll be like a push a button. You push a button and it's locked in automatically. Everything's set up.
Exactly. Right.
Man, that would be the dream. Yeah.
That level of kind of ubiquitousness that we want to kind of see kind of bumpered assets kind of get to. And I suppose to speak to your point you made before, Jordan, is that, there is similarities between LLMs and certainly how the simulation works and obviously how the Bumper protocol works. I'd love to kind of see how far we can accelerate what Bumper can do using kind of AI. And I think there's a strong play for us there.
Yeah, that's awesome. And if you can get AI into the narrative a little bit more and maybe make that more public as well, like that's going to be a really good play to get more liquidity into your token. Because I mean, I'm in a bunch of AI tokens and they're just all blowing up right now, and it's because of ChatGPT and Google Gemini and all these big AI. I think you saw Sora. I'm sure you saw the demo of Sora.
It blew my mind. I mean, if I was like a Hollywood exec, the game's about to completely change, right? Or if you're a computer game designer, everything is going to change. Like it's the most amazing time to be alive to see this kind of exponential curve of technology. It's cool, man.
It's almost scary, but also exciting. Yeah. Sorry, go for Randy.
Oh, you have an Apple Vision Pro?
It's not available in the Australia yet. So when it is,
No.
Yeah,
I'll be
yeah.
looking up.
I can't get it here yet.
Oh,
Wait.
it's so cool.
You're in Sydney, right? Jonathan, you're in Sydney? I'm in Melbourne.
That's right, just north of Sydney. Yeah, right. Okay. Yeah, cool, man.
Aussie bros. Yeah. When you go, if someone like, let's say, like Binance or any just large place that does a lot of volume, if they come to you and say like, hey, I want to do something with your protocol, but I want to market it a different way. I want to tell like swing traders or tell like whoever that this is really just crypto insurance, because essentially that is what it is. And they charge a premium for it. Is that okay to like market your baby in such a way where it's like that to say, okay, you are going to pay a premium for this, and obviously if they pay for this subscription service, they're never going to have to pay out. It's just pure profit, because I mean I don't know about any. Is there any way that it actually could fail at one point or another, like it could break it? Or I guess I have two questions. Is there any way that you tried to stress these models where it could break it on the upside or the downside? And then would you be open to that idea if some large corporation says, I want to kind of buy you guys or use this protocol and offer it as insurance?
Yeah. So to answer the first question, that's one of the things we became obsessed with, which we call the protocol kind of solvency robustness, right?
Yeah.
So it is, when we tested it, it was just awe-inspiring just how robust the protocol is to insolvency. Like it's almost impossible. We've not found a price feed that broke the protocol, and we back tested it on the last 10 years of Bitcoin price, which has had some Mount Gox 96% drop in Bitcoin price.
Oh wow!
Right?
So you've tested it with these previous drops, because
Yeah.
that's never going to happen again. You've seen the ETF and what it's done to it. It's so stable now. The price is going to slowly step up.
Yeah,
But,
yeah. So so we don't have any concerns about protocol robustness. The other side, though, Randy, that you were talking about there, which is for basically a larger corporation to white label the protocol, right, and sell that service. That's something 100% we would love to do, and that's something that our team is kind of reaching out to people. And so basically, they would sell that service under the hood. It's just the bumper protocol, just doing its thing and collecting those fees, and hopefully, kind of making sure people have to bond the bump token to support the token price, and we will kind of be a beneficiary of that, not just in trading fees, but also in speculation on the underlying token. So yeah, 100%.
yeah, that's really interesting. So you said white label. Does that mean that you would white label a bump token to a different name as well? So when they go to buy it, they don't know they're buying bump token?
Well, I think the way that would, I mean, we've talked about this, the way that would work is you probably just wouldn't know under the hood. So it would kind of say, look, there'll be a deposit of, $10, whatever, on this position. And under the hood, the protocol is buying $10 worth of bump token and holding it in the protocol.
I get you. That makes sense.
And then you can have that option. So yeah, we're not precious about that. The only thing we're precious about is driving TBL and token price. They are our main two targets.
Well, that's a really good token to be in. Like, that's like, you don't hear too many people actually say that well, if our token price goes up, it actually makes what we do stronger and better, more robust.
Yeah.
That's a very big incentive.
Like broken. It's just like a OP item in a video game. The harder the enemy, the better the item.
It's rune armor back in RuneScape.
We've been going on for almost an hour. Is there anything, Jordan, you want to bring up before we let our man go?
No, man, I think he's really answered everything that I've thrown at him pretty well. I do think that AI narrative and the AI trading bot you said is really, really awesome. I think if you guys can look into that, that would, like, that's going to be a game changer. It's going to really get people in the door, because people love AI right now. It's just it's super hot.
And I think if there's an AI bot that has this uniqueness in that it utilizes this protection ability of bumper, I think
no one else does. Yeah,
no one else can do.
Oh,
strong play.
He ran away for a minute.
He rugged us.
I'm going to add him. Oh, there he is. He's back.
Yeah.
I guess one last question before we bounce. Could you do this with NFTs? Could you go because it is a market and they trade and.
Technically, yeah. But it becomes a scalability issue. It means we've got to set up a market of takers and makers just for one NFT. So it kind of commercially doesn't work, but the protocol can do it.
We got to do this for VV. Just one thing, just for like a Superman or Spider-Man, just one of those guys. That would be really cool.
Right.
But
Yeah,
it might be possible to do it for more if it's all under the one system, right? Like if it's all
If it's all
VB,
in one enclosed.
everything's in
Yeah,
one closed loop. Yeah.
Yeah, I mean, as our CTO says, as long as we can get a price feed, we can bumper it.
Oh, well, there's 2 places we can get that for you.
Yeah, right.
Yeah.
Okay,
We'll keep in touch.
That'd be a good
That's a good idea.
experiment. Yeah, cool.
Yeah. All right. Thank you so much for joining. This has been great. We'll have you on again, especially, but hopefully we can. I know you're going to be approached by everyone and their sister as this continues going up. I hope you always can make time for us in the future.
Of course, gents. Yeah, for sure,
Awesome.
man.
Thanks,
Thank you.
Jonathan.
Thank you for having us on.
All right, no
Awesome.
problem. I'll
Appreciate
catch y'all later. Everyone say bye-bye to Dashi. Bye, Dashi.
it.
Bye, guys.
Bye.